Good morning. I think we'll go ahead and get started. We would like to welcome you to the IDOT of Transportation's Accounting Best Practices and Financial Reporting for workshop. We appreciate everyone taking the time out of your day to learn more about this workshop and about, what it really takes from a business to understand their accounting and financial reporting. Uh, okay, you want to go to the next slide? My name is Michelle Ringgold, and I am the president and CEO of Ringgold Financial Management. We're also the management supportive service consultant for IDOT, and it's a pleasure to be here to present the workshop today. Olga is also a part of our team. She's going to go over a few housekeeping items with you, and then we'll go ahead and get started. Olga, thank you.
Good morning, everyone. So we'd like to remind everyone to please mute yourself and keep video off. You guys to enter all questions in the Q&A, not in the chat. We will answer questions throughout the presentation. This session is also being recorded and provided to firms in a follow-up email, additional helpful resources that we might have on here. And we'd also like to remind you that there is a short survey following the presentation. And so please let us know how we can improve and any ideas for future workshops. Also, I'd like to remind everyone, if you didn't put your name and your the city, the name of your company in the chat, so we can make sure that you do get participation for today's workshop. And we'd like to turn it over to Michelle now.
Thank you. Okay, you can go to the next slide, please. So today's agenda, we've already kind of went through the introductions and the housekeeping. IDOT has asked us to go over a lot of the goals of the program and make sure you have information around those programs. So we're going to spend the first 15 minutes just updating you on the various programs that are free to your organization to make sure that you're aware of the different programs. And then we'll go into the presentation. We'll be discussing the importance of financial statements, the roles of a CPA, the importance of your accounting system and understanding your financial statements as it relates to your income statement, balance sheet, cash flows, the importance of various ratios that banks and bonding companies and other external and internal users may use to evaluate your company. And then also the importance of your personal financial statements. We'll touch a little bit on corporate taxes, go over some of the reasons for failure, and then just kind of wrap it up with best practices and accounting tips and open it up for any questions. So with that, you can go to the next slide. So IDOT's goal is to provide assistance to DBE firms and individuals interested in doing business with the department in ways that ensure equity, access, and transparency. IDOT, in accordance with the federal guidelines, strive to facilitate and implement programs that can help current and future business partners open the doors to doing business with IDOT. The department works towards this goal in a variety of ways, most notably through the tools available at our resource centers, the supportive service programs that is executed through our partnerships with consultants who provide management and technical support service assistance, and corresponding supportive services programs that fall under the umbrella supportive service programs. This support is provided at no charge. I mean, it's a lot of resources, hundreds of thousands of dollars of resources that IDOT has invested in efforts to help small DBE firms even the playing field. IDOT DBE firms to seek, sorry, you went too fast. Go back, sorry, I just wanted to finish this. So again, it's at no additional charge to firms seeking IDOT DBE certifications, to Illinois UCP DBE firms certified who have an IDOT contract, and to prime contractors doing business with IDOT. Next slide. The Illinois Department of Transportation, IDOT, this program is under the Office of Business and Workforce Development, or Diversity, I should say, and Brian Hendricks. He is the Policy and Supportive Service Unit Manager, and his email is up on the screen. He can be reached at brian.d.hendricks@illinois.gov. Next slide. So getting into a little bit about the services and how you can access those services. While opportunities may increase for certified DBEs firms, it's not guaranteed success, right? You get the DBE certification, and what happens next? IDOT has dedicated a center or resources to help you in all phases of growing your business. They are helping with developing technical and management skills. They help you navigate operational expenses. They connect you with established firms and efforts to help you grow your business. And we also go through various best practices and successful workshops, with IDOT. And more of that information can be obtained on their website, idot.illinois.gov. Next slide. IDOT also has 9 district offices as it relates to resource centers. So if you need to have access to computers, if you need access to the internet, scanners, copiers, printers, staff assistants, you can make your appointments with not only the technical staff during bid time to review plans. You can make your appointments with management consultants as well, if it's better for you to be in to use their resource center. These resource centers, again, are free of charge to all firms seeking to do business with IDOT. And again, you can visit the website for these locations. Next slide. So we have 2 locations in District 1. One is on Des Plaines Street, located downtown Chicago. We have another one, the Lumen Center, located in Park Forest, Illinois. District 2's office is in Dixon, Illinois. District 3 is Ottawa, Illinois. Next slide. District 4 is located in Peoria, Illinois. District 5, Paris, Illinois. District 6, Springfield, Illinois. District 7, Effingham, Illinois. District 8, East St. Louis, Illinois. And District 9, Carbondale, Illinois. Again, this is on the website. If you need a copy, of this presentation, please reach out to Olga, and she can make sure you get the information. Next slide. As far as the technical and management assistance that IDOT offer, again, free to your organization. It's ongoing help, and what they do is IDOT pays consultants to help with things like estimating and bidding, helping you with putting together financial statements, obtaining lines of credits, equipment lines, helping you set up your accounting system as it relates to if you're working on QuickBooks or you're working on Sage or Intuit or any other type of software. We assist with that. Helping you establish business plans, helping you update your business plans, and much more. Next slide. The supportive service consultants for District 1 and 3. So we have 3 areas, one being the certification. So if you're a new firm looking to get certified, or another business that is looking to get certified as a DBE, it's so many benefits of getting certified with IDOT because of the services that they pay for. And a lot of the services are not available as it relates to the supportive management services if you are not certified or hosted DBE with IDOT. So Theo Joyner with Ralph G. Moore and Associates handles certifications for District 1 through 3. Melissa Hamilton, districts 4 through 6, and Mark Vaughn, districts 7 through 9 for certification. So anyone that you may know that's looking for certification or to get certified, you can reach out to these individual consultants and they will help. As it relates to the management supportive services, District 1 through 3 would be our firm, Michelle Ringgold. Olga is on the line. She kind of helps manage that program for us. Districts 4 through 6 is Melissa Hamilton, and District 7 through 9 is Mark Vaughn. And then David Clark with ESI, he handles all of the technical for all districts, districts 1 through 9. Next slide. We have various workshops and events. The Bureau of Small Business, they come up with innovative events to help you reach a few goals. And these goals, the top 3 goals, is to really share skills to become more competitive on IDOT projects, to help individuals and business work with IDOT and form strategic partnerships, and finally, to encourage sharing of best practices, policies, and procedure changes. Each district hosts events year-round to help firms do their best with IDOT, and you can look and see those upcoming workshops at bit.ly/DBE workshops. Next slide. Today's challenge, tomorrow's reward. The TCTR, IDOT's annual TCTR conference provides opportunities, amazing opportunities for networking, skill building, and knowledge sharing among our vendors network. All firms doing business with the department, including primes, subcontractors, consultants, suppliers, and various partners are welcome. It's a great way to really network and to meet different folks. The event is scheduled or slated for February 15th and 16th of 2023, so please save the date. They're still working out the details as far as locations and all of the details. You can feel free to call or visit the website to get updated information as they update. Next slide. Available programs. Next slide. This is a very underutilized program. A lot of folks don't realize that DBE has a great reimbursement program, and they actually offer 50% reimbursement to qualified firms and select categories while the funds are still available. So there's limited amount of funding, but they'll help you and pay 50% of any association or organization membership costs. If you're looking to seek training or certification classes, they will pay 50% of that. They also will pay 50% if you're building a website or trying to develop a capability statement or in logos. There's so much more. They pay 50% if you're trying to install an accounting software like QuickBooks. So if you want more information, you can visit their website. But I really would encourage you to take advantage of this because it's free money. These are real costs, and IDOT will reimburse up to 50%. Next slide. IDOT has a business development program, and in order to qualify, or you can receive, first of all, specific guidance to propel your growth in your business in the transportation industry. You get full business evaluation and analysis, tailored training that may be eligible for reimbursement, and you also get personalized recommendations to maintain competitiveness. How to apply, more of the details are in the process of being developed, but they enroll every year and they accept 15 firms annually, and applications will be open for coming in 2023. And again, you can stay abreast of the details by visiting the website. Next slide. Mobilization payments. IDOT wanted to make sure that we went over mobilization payments for individuals that may be looking to, work in different districts. Um, Mobilization payments is really to account for the prep work and operations necessary for the movement of subcontractors personnel, your equipment, your supplies, your incidental to the project site, and for all other work or operations that must be performed, or cost incurred when beginning work. The contractor shall make a mobilization payment to each subcontractor. So if you are in District 1 and you're looking to work in District 4, you can take advantage of the mobilization and efforts to get your project up and going, and IDOT will help you with these costs. The mobilization payment to the subcontractor is an advance payment. I want to be very clear. It is an advance payment of the reported amount of the subcontractor, and it's not a payment in addition to the amount of the subcontractor. So they're advancing money on your total contract for mobilization, but it is definitely not additional contract dollars for you. Therefore, the amount of the advance payment will be deducted from future progress payments. The amount paid is a percentage of value of the subcontractor shown in the table below. So you can see from $10,000 or less is 25%. As you get higher, over 750 is 7%. But it is a nice way if you're looking to go into or do business in a different district to help you with the cash flow needs to deal with some of the upfront costs. Next slide. The Highway Construction Careers Training Program, HCCTP, boosts participation of diverse individuals in the industry and on IDOT's highway construction projects. Illinois Community College Partners offer training in industry, trade, and life skills. They give you training for OSHA 10 certifications. If you know individuals interested, they can get training in welding, forklift operations. I'm not going to read them all. Carpentry. There's so many opportunities and efforts to help, develop individuals and gain skill sets needed in our construction industry. Employment is not guaranteed. However, participants do receive job placement assistance. Next slide. As Olga mentioned, please remember to enter your questions in the Q&A box. I will try to pause after each major section to see if there's any questions or anything that we need to address. And now we're going to go right into the presentation. Next slide. Again, today's presentation is around best practices as it relates to accounting and financial reporting. And we're going to go right into understanding the importance of accurate financial statements. So the financial statements of a business provide a formal record of its financial activities. And as a business owner, your financial statements offer valuable information about your company's overall financial positions, such as areas of financial strength or weaknesses. Financial statements are important to tax authorities to ensure the accuracy of taxes and additional duties declared and paid by your company. The bottom line is that information dictates behavior. The information has to be current and accurate. And a lot of business owners, I see they struggle, especially startups and small business owners, with getting their financial statements together. Sometimes when you're putting together a proposal or you're even with certification and they want to see financials or getting your tax returns, a lot of small businesses struggle with pulling together financial statements. And financial statements are, a major concern to investors and bankers and other folks that are looking at your financials. They let us know, the financial statements, if you are credit worthy, and what your financial statements are looking like in the condition of your business. So it's very important that you have accurate financial statements. Next slide. So with those financial statements, a lot of times folks do not understand, a certified public accountant and the roles of a certified public accountant. So first of all, before we go into what the roles are, a certified public accountant, if you're certified, that means that you have passed the exam, and now you are certified. The next level is a licensed certified public accountant. So a lot of times you may engage a certified public accountant, but they may not be licensed. So only a licensed certified public accountant can render opinions on financial statements, and that would be review level financial statements or audit level financial statements. Only a licensed certified public accountant can represent you in the event of an IRS agent, along with a licensed attorney or an enrolled agent. Okay, so it's really important, if your goal is to get a licensed CPA that is different than a certified CPA, you need to make sure that you check the credentials to make sure you're engaging someone that's licensed. So the role of a CPA, providing reasonable assurance on the financial statements to ensure to the reader that the information that you're looking at are free of misstatements and errors and that they're accurate. A role of a CPA can help you set up your accounting information system, to help you secure finances, to help you determine operational analysis. What's my gross profit margins? What is my break even? To help you with internal controls, segregating the duties, safeguarding assets, and also to help you with planning and budgeting and forecasting is very important. A CPA can also help with looking at compensations. I'm growing my office or I'm going into another industry and I need to understand, what the compensation package look like. Or tax services. What should I be, an LLC or a C Corp? What type of tax strategies? Should I do cash basis versus an accrual basis? Taking advantage of the ERC credits and other things that are out there. So helping you minimize your tax liability and making sure everything is in line and compliant for you. Next slide. So why is it important to have a CPA? Well, if you're trying to get a line of credit, a lot of banks require you to have a CPA, whether that's a bank, whether that's a bonding agent. You're required a lot of times to have financial statements performed or prepared by a CPA. It's also important to have a CPA that understands your industry, whether you're in construction or you're an architect or you are a manufacturer or a supplier. It is important to focus on a CPA that has a proven track record in your industry. Making sure that the information is timely and accurate is very important because it's going to help you make decisions. You need to understand, if my project is doing well before I've spent the money. So if I'm out on a project and I've used 50% of the cost and I learned that the project is only 20%, I need to know that ahead of time. So CPAs help you design the system, report the system to put you in a proactive state versus a reactive. We also assist with generally accepted accounting principles, which is GAAP. That is a standard that we follow in efforts to ensure that your financial statements are in compliance with those standards. And most bankers, bonding companies, and other investors require you to be on a GAAP basis for your financial statements, not taxes, but for financial statements. Next slide. Understanding the importance of an accounting system. The accounting system helps you manage and plan for the decisions that you're going to make. If you're putting things in accurately and timely, then you should be able to pull up historical information, financial statement information. If I'm doing budgets on my projects and I had a project that was similar 2 years ago, to be able to pull that information up and maybe assist me moving forward to make decisions is very important. accounting system helps you record and summarize transactions in a manner so we can know if you're profitable or not, or what are you heavily leveraged, do you have too much debt? So those are things that the accounting system can help you do. If the system is configured properly, you can pull these financial statements real time if they're being updated on a regular basis. It will also help you issue financial statements to external users. And also it helps management achieve goals and make decisions. How are we doing? Looking at if we had a budget for the first quarter, did we make that budget? If we didn't, why didn't we make that budget? So we can make decisions and cuts. Next slide. So some of the basic understanding, and a lot of times we are QuickBooks Pro advisors, and we do many other softwares as well, from Sage to Foundations to Oracle. But what we find is every industry, and sometimes even within the industry, businesses are different. And setting up your system correctly, and when I talk about configurations or system setup or parameters, that's the brain of the system. If you're a construction firm doing percentage of completion, that may be a parameter that you need to turn on. If you are a professional service entity that does a lot of time and material type billing, you can turn on features to ensure that you're meeting your objectives. Your chart of accounts, maintaining your chart of accounts is so important. Understanding how to track and how to design your chart of accounts to meet your objectives. And we're going to be going into, financial statements, and we'll talk about the importance of not only having cost on your profit and loss or your income statement, but what about cost of goods sold or cost of sales? So I understand what my break-even point is. So setting up that chart of account to meet your business objectives is very important. Identifying posting periods so that if my cost happens in January, I want my sales to happen in January. So configuring the system so that you have your sales and costs aligned in the proper period. So you're not assuming, okay, I had $100,000 in sales, but for the month of January, I'm only showing 20,000 in costs. So that leaves 80,000 in profit and gross profit, when in fact, I really had 60,000 in costs, but I just didn't get the cost in the same month that I generated the sales. So making sure that the systems are set up that way. Doing monthly bank reconciliations and reconciling your account on a monthly basis is very important and best practices. Understanding your general ledger, whether that's you or you have a bookkeeper, making sure that they understand debits and credits and how it impacts your bottom line. Job costing or project costing is very important. I can understand that I'm making financial statements or I'm making money. I did $1 million and maybe my cost was 600,000, so I've made 400,000. But if I look at it on a per project basis, maybe there's a project that actually lost money, or why did this project do better than the other? So setting up not only financial statements, but profitability and income statements from a job or project standpoint is very important as well. Setting up and maintaining accurate accounts payables so you understand who you owe and how much you owe them. Setting up your accounts receivable, getting your vendors and your customers' invoices out and recorded is very important. And making sure that you're keeping your system and software updated, as it relates to tax and insurance and your payroll parameters. Next slide. So with that, I'm gonna pause, Olga. I don't know if there's any questions or anything. Otherwise, I'll keep moving. Okay. So I take that's a no.
There's no questions in the Q&A.
Okay, thank you. So now we're going to go into understanding the financial statements and the different types of financial statements. So when we talk about accrual basis, Accrual basis is a method of accounting when economic activities or financial events are considered. So what does that mean? If you don't remember anything else about accrual, is that accrual basis recognizes an invoice to your customer or recognize the sales to your customer at the time that you perform the work. So if I am an accounting, a CPA firm, and I perform and render you financial statements, even though you have not paid me yet, and the bill is $10,000, that invoice goes into the system at the time that I have earned it. The flip side of that, which is the brown, the light brown square underneath, is the expense side. Incurred expenses are matched to related revenues and the matching principle. So basically, what happens, just like I said, if I earned the sales, well, if I had a subcontractor or a consultant that helped me perform those sales and I have not paid that person yet, I would enter that invoice in at the time that the expense has incurred. Also, it's important to understand that GAAP, which we just explained on the prior slide, is the standard that accountants follow, and accrual is GAAP. So at the end of the day, I'm understanding that expenses are recognized when paid. I'm sorry, expenses are recognized when earned or incurred, and revenue is recognized when earned. Next slide. The cash method, a lot of small businesses do operate on the cash method. And keep in mind, I'm not talking tax, I'm talking accounting. So the best practices is accrual. Cash method of accounting is based on the cash flow of the financial events. You recognize revenue when the cash is received. You're recognizing expenses when it's paid. Unlike the accrual method, I'm recognizing revenue when I've earned it. So I may have billed my client $100,000. So that's when I'm recognizing it under the accrual method. But under the cash method, I'm recognizing it at the time that I receive the money from my customer. And then on the expense side, the accrual side, I'm recognizing it at the time that the cost has been incurred. Haven't paid the sub-consultant yet, but the cost has been incurred. And on the cash side, I'm recognizing the expense when it's paid. Understand that this is not compliant with GAAP, but small businesses do their financial statements on a cash basis. I will also say that a cash basis is kind of doing your organization a disjustice, because at the end of the day, if I'm on a cash basis, I can have $500,000 out there owed to me from my customers that I have not been paid. So if that 500,000 has not been paid yet, then under the cash method, I'm not recognizing that $500,000 as sales. But under the accrual method, I would be recognizing the sales at the time. So I could have 500,000 of accrued sales and not recognize it. So it's just really doing you a disjustice, and accrual method is the preferred and recommended method. Next slide. Levels of financial statements that CPAs perform. So, and I should say not only CPAs, because the first one is a compilation. And a compilation can be performed internally by an accountant or a non-CPA. A compilation can be performed by a non-licensed CPA. The other two financial statements, a review and audit, you must be not just a certified public accountant, but you must be a licensed certified public accountant to render those financial statements. Next slide. Next, okay. A compilation is the lowest level of services that a CPA can provide. And under the American Institute of Certified Public Accountants and Code of Professional Conduct Standards, we do not really perform any procedures. The only thing that we do under a compilation is we make sure that the financial statements are in compliance with GAAP, meaning that accounts receivable is listed where it's supposed to be. Current assets are listed on the financial statements under the standard. Liabilities are listed where they're supposed to be. These are really your financial statements as a manager or as the owner of the organization. We're just putting the financial statements in an order under the guidance of GAAP. We do not offer any insurance on the accuracy of the financial statements. Next slide. A review level financial statements, it gives a little bit more assurance. Again, a compilation does not have to be performed by a CPA. It can be done internally. A reviewed engagement must be performed by a licensed CPA, not just a certified CPA, a registered CPA, but a licensed CPA. And it requires all the procedures of a compilation, meaning that we make sure that the financial statements are presented and the accounts are listed in accordance with GAAP. But we also provide some limited assurance. We do inquiries of management. We look at analytics so that if your gross profit margin typically is running 20%, but then we're looking at your financial statements for a certain period and now they're 50%, we're gonna, do analytic tests to find out, maybe there's some costs missing on your financial statements. Or if you have loans on your books, but then you don't have any interest, so we do comparison and if there's certain accounts that are reflected in your financial statements, then there should be other accounts, such as if you have fixed assets, we should have accumulated depreciation and depreciation. So we're doing a lot of analytics and efforts to identify errors. One of the things I would say is that a compilation from a price point, we're considered a kind of a smaller to medium size. It's about a little over 30 of us at our organization. But from a financial standpoint, our compilations will start at about $2,500, whereas our reviews will start at about $6,500. So it's important to understand, because a lot of agencies or banks or bonding companies, sometimes they use an audited level financial statement loosely when you may only need a CPA prepared compilation or a review. Next slide. So the highest level of auditing or financial statements that a CPA would issue to give insurance is an audit. And this is where, we're really, putting our license on the line. Our audits do not start less than $8,500. I mean, our audits can go up to, several $50,000, $60,000, depending on how large the organization is. So it's very important to understand the difference. Now, sometimes if you're over a certain amount, I know with SBA, if you're over 10 million in sales, they want an audited financial statements. A lot of RFPs use the word loosely, because it's important to understand that, what's the difference between a compilation, a review, and an audit. And if I just said that the price point is $2,500 versus 6,500 versus 8,500, that's a difference in pricing. So you really need to ask the banker or whoever's requesting financial statements to make sure that they're really looking for an audit. But an audit engagement is the highest level of assurance of the financial statements. Auditor is required to obtain reasonable assurance that the financial statements are not materially misstated due to fraud. Some of the important auditing procedures are, so we look at internal controls, we test underlying documents, so we look at loan agreements and we look at contracts. If you have inventory, we will observe your inventory and even count your inventory. But also the most important thing is we don't just take the word internally. We independently go out and reach out to your clients through a confirmation to verify that what you're reflecting on the accounts receivable as a customer owing you is truly the amount that they owe you at that given period of time of which we're doing the financial statements. Larger construction firms, we will go out to the job sites. And if your financial statements or work in progress statements are showing that you're 50% complete, we will actually interview and go out and do an assessment to make sure that it is really 50% complete. So the biggest difference is that we're not only doing the work of the compilation and the review, but we're doing independent assessments to ensure that the information that's reflected on your financial statements is accurate. And then we're also evaluating your internal controls. Next slide. So the financial statements, different corporate financial statements, we're going to go over those, but I'm going to take a pause. Olga, are there any questions as of yet? Okay.
Jen, on the accrual method, okay, hold on. Okay, cash method, are expenses paid on a credit card considered when paid?
Or, I'm sorry?
For the cash method, are expenses paid on a credit card considered when paid? That's the question.
Okay, so I think what they're asking is if when is if you're on a cash basis, and if they want to turn their mic off on, they can. But I think what they're asking me is if the expenses are paid on a credit card, would they be recorded at the time that they are paid on the credit card under the cash method? Is that, I don't know if the person want to take, is that what they're asking me?
Carlos, if you could take yourself off mute.
Okay, so I don't know if I can't hear Carlos, but the question I would ask is if it's a company's credit card. If it's a company's credit card, basically you would record the expenses on, like if I just say it was office supplies, I would record the expense on the expense side of the P&L, and then I would record the liability on the balance sheet. So I would record it at the time that I have charged it. But you still have the liability to pay the credit card, but you would record the expense at the time that you charged it to the card. If it's a personal credit card and you are using your personal credit card, you would then turn in those receipts and you again would record the expense on the P&L. And then the offset would be either, a shareholder receivable, meaning that the company would owe you. Because I do realize a lot of small business owners do use their personal credit card. So hopefully that answered the question, is that yes, the expense would be recorded at the time that you charge the credit card.
We have a second question on the accrual method. It doesn't work for small businesses. He's speaking about himself because my bank account will not show the money. Am I understanding it correctly?
Can you say that again? You sound a little choppy, Olga, as well. Go ahead.
Okay.
Maybe.
It says on the accrual method, it doesn't work for small businesses because my bank account will not show the money. Am I understanding it correctly?
So an accrual method does work. I mean, what you're doing is, keep in mind, accrual is not when the money posts, but it's when you've rendered the service. So yeah, you're not showing the money, but you're showing it as an accounts receivable on your books. And guess what? Banks lend on accounts receivable. That's collateral. So if you are a small business and let's just say you did work for $10,000, what happens is $10,000 is reflected as an asset on your balance sheet, and then it's reflected as $10,000 on your income statement. No, it's not in your bank account. It's sitting on your balance sheet as an accounts receivable. When that $10,000 is collected, the accounts receivable is reduced to 0, and then the money moves to your bank account for 10,000. But you have, if you wait until you get the cash, your sales would have been 0. You may not collect the money for a month, 2 months, 90 days. So it's important for you to reflect the sales at the time that you've earned it, because banks will lend on accounts receivable. Any other questions, Olga?
No more questions, Michelle.
Okay. So we're going to go into the corporate financial statements. And as I indicated, it is so important that you get timely and accurate financial reporting. I mean, it's critical in today's market. And it's very difficult to grow your organization and to understand how you're doing and performing without it. So just a few quick terminologies. When folks talk about an income statement, sometimes they refer to it as a profit and loss. I know QuickBooks refer to it as a profit and loss, or some folks refer to it as a statement of income and retained earnings. I usually, for most folks are on QuickBooks, so they're used to seeing profit and loss. But this report basically summarizes your income and your expenses. It shows you how much money your company has made over a specific period of time. And when I say money, keep in mind, I'm not only talking cash, I'm talking sales. So I got $100,000 in sales. All my expenses is $60,000. I've made $40,000. Now to the previous question, I may not have $100,000 in the bank. I may, of the sales, I may only have received 60,000 of that, but I know that I'm entitled to 100, the additional 40,000. So it's really important that you match and use the accrual method. A balance sheet. This report shows the value of your company. It takes your total assets, things like cash, accounts receivable, inventory. It also calculates your liabilities, accounts payables is who I owe, any loans that I have. And the net effect of that is the equity. From a book value, what the company is worth. If I take all of my assets and subtract all of my liabilities, that is the worth of my company from a book value. The balance sheet also is over the life of the company, whereas an income statement is typically over a specific time, 12 months, and then it resets to 0 and it consolidates into the balance sheet. And I'll explain that because I have the statements further along in the presentation so I can show you how the numbers flow. A cash flow statement. A cash flow statement is a financial report that shows incoming and outgoing money for a particular period of time, whether that's monthly, whether that's quarterly or annually. It also does not include any non-cash items such as depreciation or goodwill. Personal financial statements, a lot of small business owners have to guarantee loans. And their companies are newer, so they do not have the collateral or maybe the history to secure a line of credit just on the business alone. So understanding your financial statements is really just a listing of all your assets, whether that's, cash that you have in the bank, saving, bonds, investments. It also takes your liabilities. And basically the formula is assets minus liabilities, and that's my net worth. So if all of my home is worth 500,000, whatever it is, my total assets is 600,000, but my liabilities is 400,000. You take 600 minus the 400, and 200,000 is my worth. Now, I'm not talking about certification because I do know that under certain certification programs, you get to exclude your home. I'm just talking about pure financial statements if I'm looking to do a loan and I do not have enough stability within my organization. I may have to secure using my personal assets, and personal financial statements are something that a document that you may be required to put together. Job and project costing, this helps track your jobs separately. So again, financial statements are great, but I want to take a deeper dive and understand on a per project basis, which projects are more profitable than others, which ones are losing and why. Accounts receivable aging, that shows how much each customer owes the company and for how long. Receivables over 90 days, you should monitor those. You should be working with customers that, pay you on time. IDOT doesn't hold retention or retainage, that's great, but some government agencies do, and it's important to understand what those rules are around it. Accounts payable aging shows how much your company owes vendors, whether that's subcontractors, whether that's material suppliers. Folks don't realize that managing your D&B, your Dun & Bradstreet, which is an organization, I know we have a separate seminar for that reflects your company's credit. How do you get that credit up? Folks don't realize that just like, or I should say, unlike a personal credit, a lot of lenders, when they lend to your company, they're not required to report good payments or bad payments or late payments. Whereas on like your personal credit, they are. So usually a supplier will report bad, but they want report good payments. You can actually reach out to your suppliers and ask them, or the people that are lending your company credit, and you can ask them to report a good, a prompt payment for you. By putting up your financial statements and other information, it helps boost up your DBE or your D&B rating. So they do a whole seminar. Actually, we sponsor a whole seminar on how to drive your personal credit and your business credit. But there are simple things that you can do in order to drive your company's credit up. And we already discussed the different levels of financial statements, which is the compilations, review, and the highest level being the audit. Next slide. Can we make that a little bigger?
That's the biggest it'll go, Michelle.
You see the plus, the 67 there, the 67%, the plus right above. Oh, okay, it's actually me, I guess. Okay, that's fine. Hopefully we can see that. So this is an example of a balance sheet, and just trying to explain and make so you can visually see what is on the balance sheet. So the first section of the balance sheet are your current assets, and the current is typically anything that is gonna is liquid, right, within the next 12 months. So if it's liquid, obviously cash in your checking account, that is liquid. Your accounts receivable is considered liquid. This is an example of a construction firm, so they have something called a cost of retained earnings or cost and access, and we call that under billings. It's an asset. So there's, in this particular section, we have 5,000,080. It's always good to do a comparative. Property and equipment is a form of assets, but it's what we call a fixed asset. And to understand property and equipment, let's just say I buy a truck and the truck is $60,000. Instead of hitting my P&L for $60,000.
day before the week is up.
I'm sorry, can you mute?
And then you let them know.
Olga, can you mute everyone? Whoever's talking, you're muted, not muted.
I'll use that, ma'am.
Chambers is an ordained minister, but he supports
Can you lock your door, please?
the government, comprised
Oh,
of
you
mostly white
Olga,
men,
are you able to mute?
to decide for women what is right for them. Many Republican conservatives
Oh,
in this
God.
region are still
Yes, give me one
ahead in
second. I'm
latest
trying to
polls.
find the.
That could mean conservative
Yeah,
this
politics
is
in the
IDOT's
Southwest will
platform.
continue to govern, at least for now. I'm
Can you
Nicole
please
Dior
mute
on
whoever
the
that
Black
is?
Formation Network. Stay with the Black Information
God.
Network as election 2022.
Found it? Thank you. Sorry about that. So,
Can you lock your door, please?
okay, Fixed assets, again, if you buy a truck for $60,000, instead of hitting your financial statements, your profit and loss for $60,000, I get to amortize that over 5 years. So you would list the truck here under, the fixed asset, property and equipment area, and you would list it at $60,000. And then the first year, instead of hitting my P&L with 60,000, I only have to hit it with $12,000, which is 1/5 of the $60,000. Now, that's not for tax purposes. Tax purposes under Section 179, I'm able to take the full deduction in order to minimize my taxes. But for financial statement purposes, I want to present my financial statements in the best light I can. So I don't want to take a hit for $60,000 in 1 year if I'm able to spread it out over 5 years. And you amortize that through what we call accumulated depreciation, which is listed at the bottom. Beneath the property and equipment in this example. So they have 395,000. They've expensed over a certain period of time, 375 under cumulative depreciation, which gives you a net fixed asset value of 20,000. And then you can see 2018 for comparison. So then you take your total assets, that's current and fixed assets in this example, which is the 5,080,000, and I'm only looking at the 2019 column, plus the 20,000, which gives you the 5,100,000 for total assets, compared to 2018 in this example, which is 5,165,000. So assets went down slightly. The next section of this statement, the balance sheet, is your liabilities. Current liabilities, those things that are maturing within the next 12 months. You have accounts payable. Again, those are individuals, subcontractors, material suppliers that you owe. Any lines of credit, any debt that you have, and you get your total liability. And your total liability in this example is 3.265 million. Compared to last year, 2018, which is 3.943 million. And then you have your stockholders' equity. And keep in mind that when I look at a financial statement, balance sheet, it must balance. So the total assets must tie to when I add up my total liabilities and my total equity. And in this example, it does. My total assets is 5.1. And the total liabilities plus equity is 5.1. They must balance. And if you get financial statements that don't, you should be questioning that. Your equity, basically, in terms of book value, is if I subtract all of the assets that I had, I liquidated this company, and I assume that everything that's reflected on the books and assets, I liquidate, and it's 5.1, and I subtract the 3,265,780, that should give me the total equity in my company, which is 1,834,222 in this example. You have your common stock. That's kind of what you started the organization with. If there was additional paid in capital, this is a C Corp. So that means that the owners have put in additional money into the organization. And then the retained earnings, that is the earnings over the life of the organization. Earnings over the life of the organization. And some folks argue that the balance sheet, tells more or is more important than the P&L. I mean, they're both important, but the good thing is to understand about the balance sheet is a company, when we look at the profit and loss, could have lost $100,000 1 year, $200,000 another year, but they still are reflecting strong retained earnings because, again, the retained earnings is an accumulative total of the company's profits or losses, because you can have retained losses over the life of the company. Next slide. The income statement, again, it's a comparative. You have your total revenues. This is an example of a construction firm, but revenues, sales, income, the monies that you're collecting or billing your customer. In 2019, it was 15 million. 2018, 10 million. So the company, grew. Cost of sales or cost of goods. These are costs that are directly related to your business. So if I'm a contractor, the things that are directly related to my business is labor, subcontractor, material, equipment. If I'm a professional service, the things that are related to my business is also wages, sub-consultants, so just anything that's directly related to your business. Typically, cost of goods or cost of sales fluctuate with the amount of sales. If I have less revenue, then one would think, just like in 2018, the sales here is $10 million. Labor was 2.3 compared to 3.4. It typically fluctuates with your sales. So in this example, we have total cost of sales or goods of 1,635,000. It's important to be able to understand your numbers. When folks ask you, well, how much of your sales do you self-perform? How much do you outsource or use subcontractors? You can look at these numbers because in the column with the percentages, it's the percentage of sales. And I can intelligently say that, I self-perform 23% with my own labor force. And then the rest of it is really through subcontracting, which is 14%. And then obviously with the labor of 23%, I'm paying, burden and material and things like that. So it's important that you organize the financial statements in a manner where you can talk intelligently to the banker or just making decisions. My gross profit margins. Gross profit margin definition is taking your sales minus your cost of sales or your cost of goods. That gives you the dollar amount, the gross profit. So in this case, it was 1,635,000. If I divide that number by the 15 million, then my gross profit margin is 10.9, just under 11%. So I can intelligently say that my gross profit margin is 10.9%. Is that competitive, or is that, trending to what what my gross profit margin should be? I get a lot of questions from business owners. Well, what should my profit margin be? And everyone's objective as a small business is different, but I can, provide based on, other clients that are in your industry, kind of what the benchmarks are. Your expenses, your G&A. We can typically call this fixed overhead, right? Or fixed costs, because your rent is always going to be your rent. Your telephone is always going to be your telephone in the office. These are things that does not necessarily fluctuate with sales. Now, they may increase because your business is growing, but they don't necessarily directly fluctuate with your sales. So in this example, your total G&A or your total expenses is 1,210,000. You would subtract that from the gross profit of 1,635,000, and that's how you get net profits of 613,000 for the year. So for the year of 2019, I made 613,000. Prior years, I had made, since the inception of the company, before this 2019, I had earnings of 1,007,032. And when you add the two together, that's where you came up with the 1,620,000, which was reflected on your balance sheet that we looked at prior. So I'm gonna take a pause, see if there's any questions. If not, Olga, you can just move to the next slide and I'll know that there's no more questions.
Okay, so there is one question. Is there a difficult process to go from cash to accrual?
To go from cash to accrual? No, it's not a difficult process if you got good records. I think the biggest thing is that most business owners, especially when you're small, you know who owes you money and for what. So the process to go from cash to accrual is just that. If I am at year end and all my sales is reflected on my income statement or my profit and loss our cash collections, then at the end of the year, I need to make an assessment to see who owes me money, work that I perform that I haven't been paid for. So at the end of the year, if I'm reflecting all of the cash that went into my bank account of $500,000, and I determined that $200,000 is work that's owed to me, then my sales would be captured at 700,000. And then you would do the same thing for the expense side, who you owe. So it's not a difficult process. And guess what? If you're IDOT, you can call our office and they will pay us to help you convert your financials. QuickBooks has the ability to run both cash basis and accrual basis, because some small businesses, they just want to be on a cash basis. But if you're trying to present your financial statements in the best light and reflect all of the income that you have coming and you have earned, it's best to be on an accrual basis. So if you're looking for that assistance, you can contact our office and we would be more than happy to help you. And it is under our management contract with IDOT. Okay. Cash flow is a term that refers to the amount of cash being received and paid by a business during a defined period of time, sometimes tied to a specific project. Measurement of cash flow can be used to evaluate the state or performance of a business or a project to determine problems with liquidity. It's very important, guys, to understand cash flow and to be able to plot it out. You cannot do anything after you have spent the money. And the last thing you want to do is be in a position where you have to make payroll and you're learning the day of or even a week before that you do not have the funds to pay payroll. We recommend at least doing a 12 to 13 week cash flow. I can tell you that as CPAs, we use the indirect method, and I will explain the indirect method because that is the best practices in GAAP. But as a small business owner, direct method is what's going to work for a small business owner because that's what most of us understand. It's like a checkbook approach. Here's my customers at the top. These are the customers' billings that I have, and this is when I expect to receive the money. And then at the bottom, here are the bills and the disbursements that I got to pay. And if for 1 month, I'm expecting $150,000 in, and I have to pay out $160,000, I have a problem. So I either have to make some reductions or get some more sales in. So it's very important that you cash flow. That's on an overall big picture, but it's also as you grow, be able to cash flow your project. Understanding that your projects, sometimes you take on larger projects. And if you're taking on a project for $500,000 and you have to outlay cash, let's just say $250,000 before you even get 1 cent from the customer, you need to understand, how am I going to fill that gap? Is this the right project for me? Can I get a line of credit or financing to help me? So it's very important that you understand your cash position and you cash flow out your projects, especially larger projects. Understanding payment terms. If you're dealing with a customer that pays, every 30 days, 45 days, choosing good customers. If you're in an environment which IDOT does not charge or take whole retention or retainage, and some of you guys that don't know what that is, if you're working on a construction project, and for example, the city of Chicago, you bill the city of Chicago $100,000, even though you earned $100,000, they hold back 10% of that until you get further along on the project. But that impacts cash. Understanding what my break-even analysis is. How much sales do I have to generate to cover my rent, to cover my office salary? Understanding what that break-even point is very, very important. And doing that analysis and looking at those ratios on not a monthly, or quarterly, annual basis, depending on how large your organization is. Next slide. Again, we show a indirect method because that's typically when you look at CPA financial statements from a licensed CPA that's going to be included in your review or your audit. And sometimes you can include it in your compilation as well. This is what the banks look at, and this is under GAAP. We typically call this the indirect method, where it starts off with the net profits that flows from your income statement or your profit and loss statement. So in this case, it was 613,000. And then you make adjustments like depreciation gets added back because that's really not a cash item. Changes in accounts receivable, depends on which way it goes, gets either added or subtracted. Understanding that when I look at the net cash used in from operating activities, which is 470, that's what the bank and investors want to see. They want to see that you're making cash from your business. Like 2018, actually, if you looked at it from a cash flow perspective, the operations did not. It was a negative. The cash position was negative. So understanding that net from cash or net cash use positive means that in 2019, that I have a surplus in cash and it came from my business operations. And that's what you want because you're in business to make money. The next section is what we call capital expenditures. That could be fixed assets if you're purchasing fixed assets, if you take in distributions, those things impact your cash. Your next section is cash flow from financing, lines of credit, vehicle loans, equipment loans. Those things can either add or subtract from your cash. And then what it does is this statement takes your total cash from operations, your total cash from expenditures, and your total cash change from financing. And basically it's either an increase or a decrease to cash, and that gets netted against your beginning cash. And that 240,000, if you went back and look at the balance sheet, is what's reflected on your balance sheet as your total cash. So a lot of lenders look at this in efforts to make a decision if you can afford the interest payments, if you can afford the principal payments. As you as a business owner should be looking at this to see that, is my business generating cash from operations, or am I too leveraged with loans? Is most of my money coming from lending? So it's really important because the objective is to earn your cash from operations. Next slide. Financial ratios are very important. These are things that CPAs look at, management should be looking at, investors look at, to understand how your company is performing. The first one is what we call gross profit margins. And that's where I showed you where we had the total sales, cost of sales, and that gave you the gross profit. But then you take those dollars and you divide it by the sales, and that's how you get your profit margin. And the gross profit margin that we just went over on the income statement or profit and loss statement was just under 11%. The higher that percentage, the better. The next one is what we call net profit margin on sales. And that is, now I have the gross profit margin, and then I'm going to back out my G&A. And if you depend on the tax structure or the type of entity, you can also take out your taxes and things like that. And the higher that percentage, the better. These are tools that bankers and investors look at, and you should be looking at. If I'm typically got a gross profit margin of 20%, and now this year it dipped down to 15% or 12%, what has happened? Do I need to raise my prices to my customers? Am I performing at the same level that I was performing, 2 years ago? So these ratios are meant to help you understand how your company is performing. Another ratio that bankers and bonding companies look at and other investors is debt to equity. Okay, how much liability do I have to every share equity that I have? So if And the lower that number, the better that number, right? So if I have $500,000 in equity, but I only have $250,000 of, I'm sorry, if I have 500,000 of debt, but I only have $250,000 of equity, that means that I got way more debt than the company's value is on a book value. That's not good. So you want to have lower debt. You know, I'd rather be in a position where I have 500 in equity and then I got $250 in debt, because that means for every dollar of debt, I have double. Same thing with current ratio. The higher, the better. This is now taking a flip side. Instead of debt, it's taking every dollar asset that I have, how much do I have to cover liability? So if I'm at a 3-to-1 ratio, that means for every dollar liability, I have $3. I mean, there's some clients and some companies that they have $2 of debt and only 50 cents on assets. So these are things that you can monitor, and you can monitor them on a monthly basis to see if your position is getting better or getting worse. The only difference between the current ratio and the asset test ratio is that the asset test ratio only looks at liquidity. That's cash, AR. It's not going to look at fixed assets or things that are going to not mature in the next 12 months. Again, the higher, the better. Take a pause. If there's any questions, let me know, Olga. Otherwise, I'll go to the next slide. Okay. Bonding companies, lenders, and most investors want to know not only about your business financial position, but about your personal financial profile. Unfortunately, a lot of small businesses, we have to guarantee our loans. SBA has a great personal financial statement template that you can pull up. But keeping your personal financial statement updated is very important. We recommend that you keep it updated on a quarterly basis, so you understand what your value is from a personal level. If you have a partner, understanding what their value is, because you know sometimes you have to bound together to secure a loan. It's important that your financial information is accurate. I know, for certifications and other things, even for a loan, you give a personal financial statement and it doesn't tie to what's on your tax return. Your tax return shows interest earnings, but yet your personal financial statement doesn't show the investment. So making sure that that information is accurate on the financial statements, because there's source documents like tax returns, financial statements, bank statements that can be used to validate what's reflected on your personal financial statement. Understanding your personal credit score, making sure that you establish and you build your credit. We have a whole seminar workshop, which is excellent on, tools and what's needed to help you build and monitor your credit. And then we talked a little bit about the DNB, the Dun & Bradstreet, which is one of the most common credit ratings. There's others out there like Experian, but the DNB is the most used. Next slide. Just a quick little example of a personal net worth. This is, an example of cash on hand. So, it could be in your checking account, savings account, what your real estate is worth. If you have personal property, that could be pictures, vehicles, whatever you own. If you have an insurance policy, if you have investments, IRAs or 401ks. So any, tangible assets. And if you total that up, in this example, is $1,022,313. And then you take a look at your liabilities, whether that's bills that you owe, if you got student loans, if you got tax debt, your mortgage, all of those liabilities or things that you owe are tallied up here. which gives you 255 in this example. And when you subtract that from the 1,022,000, the net worth of this individual is 767,313. Just works just like the balance sheet. When you add up the liabilities and the net worth, it should equal the total assets. But the key number here is the net worth, and that's 767. Next slide. So it is important to file your taxes accurately and timely. Lenders and investors, I can't tell you how many folks were scrambling with the PPP loans and forgiveness of, folks that were not keeping their books on track or up to date. Really had a wake-up call when it came to, getting tax returns caught up. It's important to hire an accountant that understands the tax laws and know your industry. Should you be on an accrual versus a cash basis? What is the laws around that? Do I want to be on a accrual basis, which means that I will have to pay taxes on revenue that I haven't collected? Why wouldn't I want to be on the cash basis unless in the IRS tax rule require you to be on an accrual basis? If you are on an accrual basis, there's other things that you can take advantage of. Understanding if you're in an environment where the customer holds retention, there's a rule that allows you to back that retention out so you don't have to pay taxes on it. If you're in an environment where you are on an accrual basis, under the IRS rules, if my contract is not 90% complete, I get to bag that out. Understanding those rules, making sure that you get your tax work papers, because a lot of times you only get the copy of the tax return that the tax preparer has supplied to you. And then if you need to switch accountants or, you need this information, now you're trying to hunt it down. Make sure that you not only you get the complete tax return, but you get your depreciation schedule, the detail. If there's a book to tax reconciliation, because I'm on a book standpoint, I'm on an accrual basis, tax purposes, I'm on a tax basis. Making sure you got those reconciliations, making sure that you got the shareholder basis. One of the things we can do, and if you want to call our office, is we can take a look at your tax return and make sure that you have all of those schedules so that you can request them and have them in your possession. One thing I'd like to leave with, and we do a whole seminar on taxes, but understand that profitable companies pay taxes. I get the client that they want to secure the $2 million line of credit. They need $10 million in bonding, but yet they don't want to pay taxes. If you're profitable, you will eventually pay taxes. Our goal is to take advantage of the tax laws so that you only pay the amount of taxes that you're required to pay. So you're making sure you're taking advantage of all the deductions. And you're also only paying when you have to pay. If I'm on a cash basis versus an accrual, we just picked up a client that was on an accrual basis and had to pay, it was $900,000 in AR at a 30% tax bracket is $270,000. If the accountant would have just had them on a cash basis, not that they would not have paid that, but they wouldn't be pressured with trying to pay a $270,000 tax bill on monies that they haven't even collected. So understanding and engaging professionals that understand the rules and they take advantage of those rules for you. Next slide.
Michelle, I saw a question on the personal net worth statement. Hold on.
Okay, go ahead.
Okay. Let's see. Do you divide that for the personal net worth statement? Do you divide that in half if you're married?
Yes, if the property is joint tenancy, I mean it's held jointly, then you can split it up. And a lot of folks do that for a couple of reasons. First of all, for certification, you definitely want to split it up if you're over, you're approaching the personal net worth cap. And then even for lending, It depends on the bank. I know some banks will allow a husband and wife to file in jointly to put everything in separately. But if you were doing it individually and it's a joint tenancy ownership, then it would be 50-50.
Okay, and so I have another one. It's in regards to loans. What if you have liens on your home? How do banks look at that?
It is subtracted. So for example, if the home is worth $500,000 market value, but you have loans, whether that's a first mortgage or a second mortgage, of 400,000, then the value is $100,000. And depending on the type of loan, you know, you have a first position and a second position, but that's basically how they look at it. You know, the market value and then any loans that you have or liens filed against your home, those values are subtracted from that market value to arrive at the value that the house from a collateral position could be utilized.
That's all the questions right now.
Okay. So this slide here is going to go over reasons for failure, right? I mean, this is done by the Business Crane. I don't think you have it cited here. I don't see it. It's like cut off, but it's fine. It's basically listed from the Business Crane. I believe it was 2019, given 5 factors of why businesses fail. And one of the #1 factors really is unrealistic growth. I can't tell you with doing some consulting services for the certification department for the city, how many businesses actually, you know, fail or they get contracts that they can't perform or they're growing too fast and they didn't think about the cash flow. You know, changes in the type of work performed, significant increases in the size of the project. I mean, you get a project that you have to staff with 10 folks and the project has to be done in 6 months, but you don't have the cash flow, you know, to maintain the growth. Performance issues, you know, inexperience, insufficient personnel, not being able to deliver what you work so hard to get a good reputation, and it's so easy to diminish that reputation based on performance issues. Management personnel issues, changes in leadership, inadequate training. Staffing is a real issue right now. Every industry we talk to, being able to get the right staffing or enough staffing. Accounting issues, inadequate budgeting, project costing. Information dictates behavior. The information has to be timely and accurate. So you have to have financial statements that give you the right information. And there's other factors as well as the owner's inability to pay. That's a huge one. Every customer is not a good customer. Make sure you understand that the customer's payment terms and that they pay on time. Next slide. And just a few tips. You know, you want to be a good contractor or, you know, a good service provider, you know, first. The programs as it relates to the DBEs, the MBEs, WBE, we call them maybe WeBe programs, they give us access. But the first thing we have to be is good at what we do. We want to find an accountant that understands our industry. That goes for also, I always say, an accountant, an attorney, a banker, and an insurance agent. Those should be your best friends when protecting and making sure that you're moving forward and meeting your company's objectives. Setting up your systems right from the beginning, doing budgeting and financial planning, estimating. You're estimating, if you're in a business and you have to do estimating, it must be accurate and it must be competitive. Understand what your costs are. If you're a construction person and you're a union, and I pay, let's just give an example, an electrician, $40 an hour, but by the time I add my fringes, my union benefits, my workers' comp, and all of that information, all of those costs, that $40 goes up to $90. So if I'm not costing things properly, then it can be really a disservice, and it can really put you out of business. Making sure that you have proper insurance coverage, that you're not being overcharged on insurance, making sure that you can manage your projects and understand joint venture agreements, understand good partnerships, understand that if I'm in a certification program and I'm almost over the cap and then I go into a joint venture agreement, how does that affect my cap size? I can't tell you when we used to do the work for the city of Chicago to assist with the MBE program, how many folks graduated because they had joint venture agreements and didn't realize the impact to their size standard on sales. So understanding that, making sure that you charge properly, because if you're a union contractor and you're in a joint venture agreement where now you're going to bring on 15 new people, that may equate to you increasing your bond costs with the union. So just understanding the dynamics, and obviously in this industry, being in this time, being innovative and being able to adopt best policies and practices, but also challenging the status quo is very important. Next slide. So with that, that does complete the presentation. I do want to just remind you guys that through our winter workshop series, which is through November through March of 2023, typically we do them on Tuesdays and Thursdays from 10 a.m. to 12. Again, the website is here where you can pull the workshops up. And we have Improving Your Credit Score, which is going to happen November 10th. We also have a great seminar workshop, Navigating the IDOT website, which is November 15th. That's kind of the basic, because it's a lot to the website and so much information. But then we also have an advanced Navigating the IDOT's workshop, which is going to be held 11/17. And then QuickBooks, that's really, really a good one. I know that we did the QuickBooks Part 1 where we set up the company. Hopefully those who have attended will be able to attend the QuickBooks Part 2, and that's performing the day-to-day tasks. So those are the upcoming workshops. And again, you can register by visiting the websites if you're interested in any of those workshops. Next slide. Prime meet and greets. So we have District 6, 4, and 1. This is a great opportunity where you can actually meet primes and even larger subs that are working with IDOT and efforts to help network your business. And then we mentioned in the beginning, but just want to remind you that the TCTR annual conference is February 15th through the 16th, and more information will be following soon. Next slide. Okay, well, thank you for attending. Please complete the survey after the event. As a reminder, we'll send a follow-up email, recording the event. We can also send the presentation, links to the resources that we went over, and programs, and any upcoming workshops. With that, if there's any questions, I'll leave additional questions, I can answer them. Otherwise, we can end.
We do have some questions. It's that, well, we have one. I am planning to conduct either Regulation CF or SCOR Form U7 offering, and I want to make sure my financials are audited so I can qualify to raise the maximum amount of capital via crowdfunding. How can I work with Ringo to get set up for an audit? I am planning the crowdfunding Q1 2024, so my 2023 financials will be audited as I am setting up a new legal entity.
Okay, well, you just can contact either myself or Olga, which Olga, I think you put your email in the chat, and we can set up an appointment to take a look at what you have and get you a quote.
And that's all the questions right now. So if anybody has a question, if they they'd like to unmute themselves right now and ask the question before we conclude the meeting.
Okay. Well, I thank everyone and enjoy your day, and thank you so much for attending. Take care.